There we go. So we're going to talk through today the weekly profiles, and I want to take you through a liquidity story with weekly profiles. First off, let us go through an overview of weekly profiles. We're working on information from month 7, and the weekly profiles are all about the weekly range. We're going to talk through how the weekly profiles set up and navigate the weekly range. So let's go through an overview. There are 12 weekly profiles, 6 bullish, 6 bearish, and each profile has its own liquidity signature. Trading the weekly profiles is a short-term trading model, meaning you're trading the weekly range, and the weekly profile helps you to determine how the direction of price will shape up for the week with the open, high, low, close setup. So let's take an example. There are 12 of them, but let's look at 6. And when you get these weekly profiles all together, it can be a big jumble. But really what you're doing is you're just organizing them. They're mirror images of each other. So you can have a Tuesday high, or you can have a Tuesday low profile. You can have a Monday high or a Monday low, and respectively a Thursday high or a Thursday low. And there are 6 other profiles, really 3 other bullish, 3 other bearish. And all of this is found in month 7 of the core content. So it's a liquidity story, right? We are navigating the liquidity story of the week that creates that weekly candle. And in order for you to determine what the story is telling, you need to have some starting point. That's Monday's range. It's like the opening paragraph, opening chapter of the weekly profile. So Monday's range is absolutely key. With Monday's range completed, you now have something to base your projection off of. You have a playing field to work off of inefficiencies or to determine liquidity. And to get into a weekly profile, we use intraday profiles. They are the fractal application of a profile that allows us to then allow us to trade if we want to get in on a lower time frame. So intraday profiles will pair up with weekly profiles. And what you're looking at are the 4 common ones. The 5th one is a seek and destroy model. But let's look at the 4 ones. So this is taken from month 8. We have a raid lower. So that's a London raid bullish. We have a London raid bearish. There's a London continuation bullish and a London continuation bearish, which ICT calls the protraction or the delayed protraction. Really and truly, all you want to know for sure is, does London's range get raided or does it not get raided? You can still have a raid bearish, raid bullish, no raid bearish, no raid bullish. Let's take a look at one example. We're going to look at a London continuation. This is where the protraction is delayed after London. So London continuation. The diagram on the left is an absolutely beautiful diagram giving you so much information, but we have to recognize it's a rudimentary diagram. It is intended to be like not your GPS type of map where every single turn or intersection is highlighted, but it's a rudimentary map. It's a guide, a template. Not every setup is going to literally have that small movement or that large movement, but it will generally give you this direction. There's some things about it, right? The pros of having a map like this is that it gives you a liquidity story. It tells you or guides you as to when and where price will either take internal versus external liquidity. It will give you a time frame or a time marker as to when you can expect price to continue pushing versus retracing versus reversing. And as a template or a profile, it is universally repeating, meaning all assets that work off of the same mechanisms of having a New York session, having a London session, having an Asia session will use profiles like this. They're universally repeating. The cons, of course, that is vague. It's not going to be super specific. For example, what's up with the timings at the bottom? You go straight from London Open to New York Open as if they are so close to each other by, what's that, 5 minutes, 10 minutes, 15 minutes? There's something that needs to be extrapolated there. So these things are so deceptively simple that sometimes it can lead to confusion. So let's try and clear some of that up. So the London continuation as a bullish profile. Let's first pay attention to what are the actual times of the London session. We're going to use 2 to 5 for that open. Then what are the times for New York? Well, New York is 9:30 to start. So clearly the London Open is not right up against the New York Open, but there is a period of time that happens in between. And so we're going to denote London as our blue box, 2 to 5 in the charts that are coming up. And we're going to look at New York as this kind of off gold yellow box. So what we've got is an intraday profile, and we're going to use that fractally to navigate the weekly profile. I think it's best if we take a look at some examples on charts. So let's jump into NQ. And NQ has been interesting for the past 2 weeks. We are going into the second week of February. And NQ has been really interesting in that it has given 2 back-to-back weeks of Monday lows. So let's first pay attention to how do we navigate this. So on the chart, we've got Monday and Tuesday, and we've just finished up London on Wednesday. Now we're still trying to determine what type of profile this is. We have Monday making a low, but we also can see up at the top that Tuesday has made a high. How do we tell the difference between a Tuesday high of the week and a Monday low of the week? Well, we want to see a few things happen on Tuesday and then going into London on Wednesday. Firstly, Tuesday needs to take some form of liquidity from Monday. We want to see some swing low on an H1 hourly chart being taken on Tuesday and then giving a market structure shift. Then on Wednesday into Thursday, we want to see price respecting bullish arrays. So in this example, we can see here that price has taken this liquidity from Monday, and then it made this run higher. When it did that, we have that high of the week formed, but we don't know what's coming next. Then we see that we've got a nice fair value gap here, which and an order block, which price then respects on Wednesday going into London. So let's look at the rest of the week and talk through how this whole thing played out for us. So we have price on Wednesday falling into that order block. We also see that we have a London low, and we're going to go on a lower time frame to see what this price action looks like on a 15-minute and a 5-minute to determine, is this a London raid or a London continuation bullish? Either way, when we go into Wednesday, we already have a sentiment here. A, we've taken some liquidity from Monday. B, we've created a bullish discount array. We've traded into it on Wednesday London, and now going into New York, we have the opportunity to say, well, I would like to confirm if this is an intraday profile that I can engage with. The other thing we can do with Monday's range is we can start setting projections. So the great thing about this is that we've got this standard deviation up here, and this standard deviation is what's going to be our draw on liquidity, because we know that for a midweek consolidation, Wednesday and Thursday will continue the direction of Monday's low, and we can expect to see something where price will reach that standard deviation and potentially give us an opportunity to be bearish to go back into the week. So let's jump down into a 15-minute time frame. And so here's how the play looks. So we use an hourly chart to set the weekly range and the weekly profile, and we use a 15-minute chart to start working our intraday profiles. We get on to the 5 and the 1 minute for the trade. So London plays out. We can see that Tuesday drops down into Monday's liquidity. London on Tuesday gave a nice London continuation, so that's where price did not dip below. Price did not dip below London, but continued bullish. And then after going bullish, we had a retrace. So this is the in-between time that I was referring to. London in blue, New York in that off gold. There's an in-between time. So when that in-between time forms, we can see price running higher. Then we see it retraces into London's range before then popping higher in New York. That's a London continuation bullish. Then in the overnight session, price then retraces all the way back down to that hourly order block. So on Wednesday, we're now anticipating to see how price moves. Now we have a wick sweeping just below London's low, then price continues going higher. When price doesn't make significant market structure to then go higher, that would not, in my mind, be a London raid, but it would start to tease people to break out of London's range with all of this overnight session trading. But because we've got intraday profiles on our mind, we know that we're seeing a in-between price action here that is trending higher. It's not a London bearish raid, and so we know we can take that out. The likelihood is that it's going to be a London continuation because price took liquidity from Monday. It respected an H1 order block in London, and so New York is going to reverse or go the opposite of London's direction. It's considered a London continuation because throughout here we can see that price starts to make that turn and then it continues bullish. Now we're back above Monday's high, and the space that we're working with, that price action is between that Monday high all the way up to the standard deviation. So coming into Wednesday, we see that price makes a move below London, and then New York is back inside of London's range. That is the telltale sign that we're looking for a London raid to go bullish. A London raid to go bullish up to or trend towards the standard deviation. So we have a PM session sweep of the AM range. We push bullish because we knew that's the sentiment we want. Then on Friday, we have a London raid bearish with NFP in its wake. So price makes the London range, has the price action in between that sweeps higher, and then breaks down. Once it breaks down, even though this is a bullish weekly profile, we know that we can go bearish up to the point of Monday's high. So price is still in a weekly profile bullish, even though you'll have intraday profiles that could be strongly bearish. So Friday closed off just floating below Monday's range high. So we go back up. So here again is the hourly chart. And what we're saying is we want to be a weekly profile trader. We want to know how to navigate the weekly candle. And the weekly candle in this case made a Monday low. Friday had the high of the week, but we closed in. So as you make that if you imagine that candle, all of that price action in the middle we want to engage with, understanding how that weekly range is going to play out. So weekly range in the back of our mind, intraday profiles in the forefront of our mind, each day looking for a signature where we can engage with the market. One thing about these Monday lows, always anticipate that there's going to be one day, Wednesday or Thursday, somewhere in the middle is going to get a bit choppy, and we can see that happened on Thursday here. And then Friday, because of the nature of this Monday low, will either just be a bullet train higher, or it will reach its destination and potentially form a retracement back into the range. Not that it is bearish for the week, but that it will pull back into the range that the week had formed. Okay, so that's it. Weekly profiles, intraday profiles, engaging with the market. Let's see how we take this one for the rest of the year. Here's to an awesome 2025. My goal in 2025 is to get some journal entries in for every weekly profile that has been taught. And I want to be able to give some live examples, or at least some recent examples of how those weekly profiles play out in action. Okay, we'll do it again.